and more. CEO and CFO believes this quarter will be a defining one for Byju's as it gets its in-house in order.
Fintech startup Vegapay has raised $1.1 million in a pre-seed round led by Eximus Ventures, along with DSP HMK, Capri Global, Upsparks Capital and others. The firm will use the funding to develop their technology and aims to create an omni-channel lending solution.
GVK Industries signed Keshav Reddy and his co-founder Rajiv Ranjan have launched a consent-first and privacy-focused platform Equal for Indians to share IDs in a secure and seamless way. Equal is built in partnership with India Stack and DigiLocker.
Nearly half the environmentalists active on Twitter and now X left the platform in the 6 months following Musk's takeover. Researchers found that this could have serious implications for public discourse surrounding issues such as biodiversity, climate change, and natural disaster recovery.
Coinbase has secured regulatory approval to allow US retail customers to trade crypto futures. The firm said the approval was a critical milestone that reaffirms its commitment to operate a regulated and compliant business. Well, those were the headlines from the startup world. Debt collection SaaS platform Credgenics recently raised $50 million in its Series B funding round, led by Westbridge Capital, Axel, Tanglin Ventures, Beams Fintech Fund, and other strategic investors. The company is now valued at $340 million and will use the fresh funds for product innovation, global expansion, as well as for capturing other BFSI industry segments. To elaborate on these plans, joining me now is Credgenics co-founder and CEO Rishabh Goyal. Rishabh, welcome to Startup Street. Now, Credgenics is a SaaS-based debt collections and resolution technology platform. If you could first explain to us how you've reimagined debt recovery through digitization and analytics at Credgenics, and then take us through your suite of debt resolution solutions.
No, thanks a lot for the introduction. So I think in India, there's a huge problem of credit penetration, which almost all the lenders are trying to solve. And hence, there is a lot of disruption when it comes to the fintech lending space, right? All the companies, whether it's Paytm, BharatPe, anyone actually is trying to penetrate and deep-root the credit to the last mile where actually it's required. So a lot of focus was there on penetration problem, but I think the major problem across the lending ecosystem was that the collections are not digitized, and hence it's a high manpower intensive job. Which is not scalable at the same pace the lending is. Hence, it was very important that you can digitize the entire ecosystem, because if you're able to digitally source the loans, then there is no reason why you should not be able to collect them digitally and create a digital interface for the borrowers also to repay. Maybe I think what all manual interventions are required, to a larger extent, they can be automated or digitized. So we are working with 100 plus lenders, banks and BFCs in India, outside India, in Indonesia and Vietnam, to help them streamline this entire flow around collection, so that it helps them lend faster and it just helps accelerate the growth of financial
speaking from what you just said, Rishabh, like you said, Credgenics works with over 100 leading private banks, NBFCs, fintechs and asset reconstruction companies. You've touched an overall loan book worth $60 billion in FY23. What is the kind of efficiency or increase in resolution rates and improved collections have you brought for your clients? What would you say is your USP?
So we monitor multiple KPIs, we call it, right? Key performance indicators. So one major performance indicator is how we are able to overall reduce even the bounce rate, like as in that if you're able to reduce it even to go into the delinquency bucket, what is the delta improvement in that? So that's a major one where at an aggregate level, if I have to say, there has been some 7 to 8% improvement in terms of even bounce rate getting reduced at an overall level. So suppose there were 100 customers whose EMIs were due on a certain date. Earlier, there were 20 customers who used to, or maybe 25 customers who used to bounce. And now after the implementation, that number has gone down to 17 or 18. So there is an absolute 7-8% delta in terms of how my bounce rate has gone down, which essentially means that now collections is not that big of a problem statement in terms of the funnel. So that is one major area. The second is the cost of collection, how removing manpower in terms of call centers, field activities, you are able to move more towards the digital approach, because obviously the cost of sending an SMS, WhatsApp or a voice pod call is much lesser than a human intervention, and it's also prone to escalations. There is a lot of RBI involvement which has now come into the play. to ensure that the customers are treated fairly and there should not be any major harassment while dealing with the customers, because there have been so many cases where fintech lenders are unduly exercising their collection activities to harass the borrowers. I think so. A lot
Okay.
of these parameters in terms of compliance breach, in terms of resolution rate, in terms of cost of collections are the KPIs which we track, and there have been significant improvement in terms of resolution rate. I think if we say depending upon the product, but at an overall level, there would be at least 15% improvement in terms of
Okay,
overall
Rishabh,
amount collected.
those are some good numbers. Let's talk about the $50 million funding that you've raised. You plan to innovate and expand globally. If you could elaborate on these plans, what are the new offerings in the pipeline and what new geographies are you eyeing?
So we are eyeing, there are two major things from this fundraise which we are trying to solve for. One is global expansion, which is outside India. We are now in Southeast Asia markets, in Singapore, Indonesia, Vietnam. I think we'd like to expand the offerings and set up a full infrastructure and team there. Second would be to capture even other segments. Like, for example, we are entering even the premium collections use case for multiple of the insurance companies, because that's also a big area where collections happen, or maybe the renewals happens manually through call centers, etc. So that is another segment which we're opening. Third, obviously, we are looking out for some strategic M&As if available in the near adjacent, I would say, product avenues, which are selling into the BFSI ecosystem. So I think we're in discussions with a couple of companies from a acquisition standpoint, if we can help fast track that journey. So I think these are 2 or 3 major areas where we are trying to focus upon.
Okay. Credgenics valuation has increased over 3x to $340 million, like I mentioned earlier. From your last fundraise in 2021, you've achieved 7x growth in revenue. You've turned operationally profitable with 100 crores in revenue in FY 2022 to 2023. What has led to this bullish growth, Rishabh, and what are the revenue targets going forward?
So one, obviously, the major factor which essentially helped us was in the COVID phase, where a lot of focus was on digitizing the entire processes internally across the sectors. I think so. One was big push, which actually enabled or accelerated the adoption of digitization across the banking and NBFC segment. Second, in terms of what exactly we see as our milestones in terms of revenue, I think so. We have posted close to 100 crores last year, and I think this year at least the target is to grow 2x from this number and achieve 100% growth. So I think that is the target. Remaining operationally profitable. So we are this year at least at a monthly level we broke even. So I think the target is to at least not lose that. I would say that lose that gist of running things profitably and in a very unit economics, like
all right.
One
final question: is inorganic growth the way forward for you? And if you could also talk to us about your global expansion plans.
So on the inorganic side, I think we are looking out for companies whose offering is adjacent to ours, maybe in the risk segmentation side, like who is selling to the basically the banking ecosystem itself, but maybe not on collections, but on other areas of the lending ecosystem or lending value chain. So those are some of the companies which we are having discussions with in terms of if we can acquire. Second, in terms of global expansion, I think a lot of markets like Indonesia and Vietnam and other Southeast Asian countries have exactly the same problem statement as India, where the numbers in terms of GDP per capita or maybe the collection rates or the lending credit penetration exactly mimics the Indian ecosystem, and they're 5 years behind India in terms of financial services play. So those are become an ideal market for us, where the population is also high, and also these are the real problems which we are solving in India.
Rishabh,
to be solved there.
We've run out of time, but wish you the very best in all your growth plans, and many thanks for joining us on Startup Street today.
Thanks a lot. Thanks a lot.
One fundraise to another. Fintech startup Vegapay, a digital lending and card management platform, has raised $1.1 million in a pre-seed funding round led by Credgenics Ventures, DSP-HMK, Capri Global, Upsparks Capital, MGA Ventures, and others also participated. Now, Vegapay was co-founded in October of 2022 by senior fintech experts and banking industry veterans. Vegapay's vision is to liberate financial institutions and fintech enterprises from every technical barrier which hinders offering a lending program. Joining us now to discuss this further is Gaurav Mittal, the co-founder and CEO of Vegapay. Gaurav, thank you so much for joining us on Startup Street today. If you could quickly, concise for us, Vegapay was started just last year. So talk to us about what it is you have on offer and what's the demand that you're seeing thus far. You're not directly lending to your consumers at this point.
That's right. So for us, the target customers are banks and NBFCs. We are building a digital lending stack for both NBFCs and banks to go fast, rather than wasting their time by integrating with multiple tech vendors. So right now, what happens typically for a bank or for NBFCs, they integrate between 8 to 10 tech vendors and then offer the co-lending solutions or the lending platform. With us, it's going to be one single integration with Vegapay, and they can go live much faster. And also, the idea is to solve for the pain point of the co-brand partners when they launch, say, for example, co-brand credit card, they spend again 8 to 10 months. With us, the idea is to reduce it to 8 to 10 days.
All right, so you reduce it to 8 to 10 days. Now, you've raised the $1 million. What do you plan to do with the funds? How do you plan to scale your company?
Yeah, so for us right now is the product build. So we are in the early stage of the product building. The fund will be utilized to build the product, and of course, since this product is meant for the regulated entities, we'll be spending good amount of time in legal and compliance, so that for a bank or for NBFCs, they need not to worry about any such hindrance. So it's about product building and regulatory and compliance checks.
All right, so product building is what you're going to spend your money on, and compliance at this point. Talk to us about the kind of clients that you work with. How do you plan to grow this further? You're also looking at partnerships. So who are you? What are the partnerships that you've built right now?
Yeah, so see, for us, as I mentioned, banks are the primary audience, and we are partnering. We've already partnered with a couple of banks as we speak. And typically, the idea is to help them launch co-brand credit cards as well as cards for themselves. Typically in India, about 10 banks who choose meaningful card in force, wherein when I'm saying meaningful, about 1 million plus card in force is something that these banks have. Most of the mid-sized private sector banks, public sector banks, as well as large, small finance banks, they don't have their own card stacks. So the idea is to help them launch credit card much faster. And at the same time, to increase the distribution, we also help them grow with the co-brand partners.
All right. And what's the revenue model? What are the revenue targets that you set for yourself for this financial year?
This financial year will be around $2 million ARR, but by financial year end of 2025, the idea is to go by 10 million ARR. Yep. And for us, typically it's per card, per user fee, and the spends interchange income that we charge.
All right, per card, per user fee. Now, talk to us about your presence. Credit card penetration is low in tier 2 and beyond cities. Is this the base that you're targeting? What's the opportunity you see here in terms of the Bharat opportunity?
You're right, and that's pretty much that we want to target. Right now in India, about 80 million credit cards are in force. Around 35 million customers are unique customers. NPCI has given a dictate and mandate to issue around 500 million credit cards in next 5 years. So we want to, work along with NPCI and again Visa and Mastercard to ensure that in next 2 to 3 years, we help them achieve the growth plan that they have in mind. And of course, as I mentioned, most of the mid-sized private sector banks, PSU banks, as well as small finance banks, they don't have credit card stack. We want to help leverage and grow along with them.
All right, you want to help leverage and grow along with them. Do you have any more plans to raise funds further going forward, or do you think this will suffice for some time?
Yeah, so this is good for 12 to 15 months. But the idea is once we go live with some of these banks, as I mentioned, and we are aiming to go live with them by end of this year, the idea is to raise next round, probably March, April of next year.
All right. And what about the cities that you're present in? Where are you currently present in, and what's the expansion plan?
Yeah, so right now we have offices in Bangalore, Gurgaon, and Mumbai. We have got around 30-member full-time engineering team. In terms of our expansion, of course, we will continue to be in these 3 cities. But in terms of number of hires, the idea is to have around 20-25 more engineering team by, say, early Q4 of this year.
All right. And apart from your current core offerings, are you looking at some new offerings as well? How long till we see that?
Yeah, so our offering includes, as I mentioned, lending products, which also includes co-lending. So we've already partnered with a couple of NBFCs to support their co-lending tech stack. We are also offering them various other card platform, which includes Forex card, prepaid card, along with credit card. So we have got partnership across all the products that I've just mentioned. The idea is to go live with them by end of this year.
Okay, so the idea is to go live by the end of this year. But while you've been doing this and you're a newer company, what are the biggest challenges you've faced when it comes to launching all of this and taking your product to your customers?
See, for us, the biggest challenge is since we are new, for banks, typically they prefer to have a more established player. We are new. We have not any history in terms of launching the product. So that's one where the sales cycle might be a bit longer, but we are fortunate enough to get a couple of these banks within 3 to 4 months of this year. So for us, we are not seeing any challenge right now other than implementation. So if you ask me honestly, it's about the internal team, how best we implement the solutions to these banks, but no external challenge that we have seen so far.
All right, and if you could finally tell us, before I let you go, what are the goals you've set for this year? The revenue numbers you've given us, but apart from that, what do you hope to achieve by the end of this year?
Yeah, so by the end of this year, as I mentioned, we should go live with at least 4 banks across multiple products that I just mentioned. And also we intend to onboard around 2 million customers by March of 2024.
All right. Okay, great. Gaurav, thank you so much for joining us on the show, and we wish you all the best going forward.
Thank you so much for your time.
Well, with that, it's time for us to head into a short break. But up next, early-stage venture capital firm Rocketship.vc believes that the India story is very strong. We bring you a special conversation with the firm's managing partner on the other side. Stay tuned.
Welcome back to Startup Street. Now let's shift focus to the investor economy. Ritu Singh is with Madhu Shalini Iyer, the managing partner at Rocketship.vc. Let's go across to them.
Silicon Valley-based Rocketship.vc, which is a venture capital fund, is very bullish in India, with almost a third of its total allocation to date, if not more, made in the country. It has backed about 20 Indian startups to date in the early stage Series A and Series B round funding. So I have with me today the managing partner of Rocketship.vc, all the way from Silicon Valley here in India, Madhu Shalini Iyer, joining us now to tell us about the venture capital's plans for the country. Madhu, thank you again for your time here on CNBC-TV18. Always a pleasure speaking with you as well. So let me start about your view in India. How much have you deployed here so far? And given what's going around when we talk about the macroeconomic headwinds facing the global economy, what makes the India startup ecosystem attractive to you?
So we've deployed, in the first fund, about a third in India. In the second fund, about 50% in India. And the third fund is still fluid. And, we are expecting it to be, about a third, a little bit more than a third. Indian ecosystem, obviously, is not where it was in 2021. Everybody knows it. But there is just such a lot of amazing talent here, and the founder quality. It is just stellar. We see the fintech space to still be sort of, pretty strong. We see that B2B SaaS is really strong, and surprisingly, deep tech is emerging extraordinarily strong, be it sustainability, be it space tech, some generative AI movement as well. So India is sort of primed to take advantage of the current trends and primed to take advantage of the headwinds that China is facing. Super excited.
All right. But talking about some of these headwinds within the country itself, for instance, the regulatory environment. And we've heard some rumblings from investors because of recent moves like, what we saw in the gaming arena with the GST being imposed. What do you make of the evolving regulation? Are there any concerns because of the vast number of them coming now? Whether it's the angel tax or this 28% GST on gaming, are there concerns for you?
Sure. I think, the tax environment in every country is a concern for most VCs. Yeah. But, I'm just being facetious. But the reality is that, I'm really happy about the fact that the regulatory environment, it has to play catch up. But there is a bias to action. And there is a lot of experimentation, and some of the experiments obviously are a little hard to swallow at times, but then we are constantly evolving. And this regulatory environment, is certainly something that is going to be evolving at a pace which most of us might not be comfortable with, but it's required. It's required because it has to play catch up, and I love the experimentation, but the bias to action mostly is great.
Okay, so back to the question on the money. How much have you deployed, across your 3 funds in India so far? And what's the plan with this third fund? You'd announced the first close of $125 million. Is that the total corpus, and how much is being deployed in India?
Yeah, so, like I said, the first fund, we deployed about a third in India, and the second fund we deployed about 50% in India, and the third fund is a little fluid. Our deal flow, so we don't really have a corpus because our deal flow comes from our algorithms. We are a data-driven fund, and the data is definitely still showing India in a big way, and we want to make sure that we can, and it's not surprising. Is it going to be 50% again? I don't know yet, but it's definitely going to be between a third and, somewhere more than a third.
Okay, going by the past trends.
Going, not just by the past trends, but going by the algorithms and the data as we see it right now.
All right. The last couple of years, we talked about this boom for startups, right? Before the last couple of years. And then, of course, the funding winter started. Now we're starting to see selective companies return to profitability or, post their first profit figures after a long time. From a VC point of view, how do you see the environment shaping up? Are we out of the woods just yet with how things are shaping up globally, or do you think there'll be a longer funding winter before these startups come out of it on the other side?
You have to see the other side of the equation, which is the exit environment. The exit environment is a very, very good predictor, I would say, of like how companies, how the funding winter and how that's going to, end and things like that. The exit environment in India has been, a little tough. There's not been too many IPOs. There's just been just one now, and then there's the IPO market is getting cleaned up right now, and also the acquisition pipeline, M&As have been a little bit weaker than we would have liked it. But I think, look, I think that, I'm guessing that within a year, IPO pipelines are going to open up. Okay. And once that happens, I don't think that there's going to be, money problems on this side.
So,
where there's
the public market will take care of what's not happening on the private side.
I think that's always the case. I think that I would say 12 to 18 months, 12 months in my estimate. But these are all just estimates. We all have to have humility to know that none of us know.
Sure.
But yeah, I mean, that's what I think.
But in your conversation with founders, what do you look for and what are the red flags you avoid?
No, I think that's a great question. I mean, we are a data-driven fund, as in our deal flow comes from the data. So we're seeing, about 120 companies per month from our data, but it's still directional. We still have to talk to the founders, to your point, and we still need to make those investments based on the last mile, which is, talking to founders, getting the company data, and and sort of investing time in figuring out if this is a company that matches with what we would want to invest in and our data. And the fact of the matter is that, look, we've always told our founders that thrive, don't survive. And the common qualities that we see with founders, you just have to have a lot of passion for the problem that you're solving. And that, I think, is, the persistence and the passion is foremost.
Madhu, thank you so much for your time here. It's always a pleasure, like I said, speaking with you. Thank you. Thank you very much. On that note, I'm going to toss it right back to you guys in the studio.
Well, thank you, Ritu. And with that, it's a wrap on this edition of Startup Street. More news and updates continue on the other side. Stay tuned.